Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
Hello, Namaskar. You're with me on BTTV. I'm Tanya Aneja and this is Market Today, a show where we'll get you all the latest market updates and stocks and sectors that are buzzing in and much more. Well, we'll come to the markets, but let's talk about the news of the day first. And of course, it's about Delhi's Chief Minister Arvind Kejriwal. He got arrested by the federal agency in connection with the Delhi liquor policy money laundering case yesterday. A team of ED officials arrived at his residence to summon him to join the investigation in the Delhi liquor policy case. The Aam Aadmi Party has now moved to the Supreme Court against the arrest of Arvind Kejriwal, and the party also said that Kejriwal will continue to hold the post of Chief Minister. Well, we'll keep getting you the latest updates as far as this arrest is concerned. But let's now shift focus to the markets. Well, benchmark Sensex jumped 539 points, while Nifty closed above that 22,000 level odd mark following buying in metal, power and energy shares and a rally in global markets after the US Fed projected 3 rate cuts this year. Nifty Bank had its first positive close after 9 days of fall. The broader markets also rebounded with the BSE Midcap and small cap indices gaining nearly 2%. Now global cues are positive and US markets are at fresh record high. Dow Jones, if you see, that was up around 269 points. S&P also ended around 16 points higher, and if we talk about Nasdaq, it also gained around 32 points, and Nikkei 225 that crossed 41,000 level for the very first time. But now the question is that can Nifty hold on to that 22,000 odd level mark? And for that, let's welcome our market guest on the show today. Today we have with us Mr. Basum Malik, who is the founder and chief equity advisor at Intel Sense Capital, and we also have with us Mr. Ratnesh Goel, who is the senior technical research analyst at Arihant Capital Markets. Gentlemen, very good morning. Always good to have you on BTTV. Let me start with you, Mr. Basum Malik. You know, we have had a volatile session, a volatile month if we talk about March, but what's really next for the markets? Do you think that this damage that we have seen so far, that is behind us? What's next for Nifty, and where are the markets headed according to you going forward?
So first of all, good morning to all your viewers. I think, I was expecting a market correction over the last few months, was pretty cautious. But now I think with the correction that we've seen in the last couple of weeks, I think a lot of the so-called froth is out of the system, and people are cautious. People are expecting markets to be volatile, and typically markets don't give in to people's demand. The larger majority, whatever they expect, markets tend to not follow that. So when everybody is expecting a correction or expecting markets to be weak, typically what we found historically is that markets don't sort of follow that. So, personally, I think that we are past the extreme volatility phase, and things will get slowly better from here.
Okay, absolutely got that. And now coming to you, Mr. Goel, let's take a quick technical check from you as well. What are the charts telling you about Nifty and Nifty Bank?
Very good morning, Tanya. Very good morning, everyone, and very good morning to every viewer. Well, definitely, the market is consolidation from the last 2-3 days, and market is holding the 50-day moving average. This is a very good sign. Even the day before yesterday, we have seen that the market just close below the 50-day moving average, but once again we have seen the recovery in the yesterday trading session. So I believe that definitely there is some consolidation is will remain continue maybe for 2 or 3 days, but definitely the 21,800, 21,500 will be the very key level. So from here definitely we can see the some upside now, because yeah, from here the risk reward ratio is in very much favorable, because the 21,500 will be the very key and the important level, and we are not seeing below that. So once again, once the March will settle that, and we believe that 22,250 and the 23,350 level we can see. So overall we can say that every dip could be the opportunity to buy. And if you look at the option data for this expiry also, like there is a not so much activity in the option side, like call writer also active at 22,000, and the put writer is also active at 22,000. So there is a good battle between the bulls and bear at this level in the Nifty side. And now if you look at the Bank Nifty side, Bank Nifty is from the from the starting of the month. Starting of the March month, there was a continued underperformance, but now it seems that somewhere the Bank Nifty also has met the bottom or the at this level. So maybe we can see the some performance from the Bank Nifty also, because there is a clear indication that 47,000 is the call writer active and 46,500 is the put writer active. So this range is the option data is indicating this range. So I believe that once we start trading above like 47,100 or 47,050 level, there is a fair chance that we can see the 47,500 for this expiry. So I believe that definitely in the Bank Nifty also there is a chance, and there is a good opportunity. If we get any dip, there is a good opportunity to buy.
Okay, buy on dips, that is, I think, the strategy. But I think, gentlemen, we should talk about technology stocks as well. Nifty, by the way, is in the red in the pre-open session, 21,932. That's the level where we are at this point in time. Let's see how the opening action pans out. But coming to you both for technology stocks, because they will be in focus today, as Accenture, that has lowered its revenue forecast for the fiscal year 2024 to 1 to 3% from 2 to 5% earlier, due to economic uncertainty leading clients to reduce spending on consulting services. Now, Accenture's performance is widely regarded as a benchmark for the Indian IT industry, providing a glimpse into the expected outcomes for the Indian IT companies. Now, fourth quarter earnings season commences on 12th of April, with bellwether TCS reporting its earnings. So, coming to you, Mr. Basum Malik, first for this Accenture's cut that we have seen. How do you look at it, and what's the impact gonna be on the Indian IT companies according to you?
See, I think it's very clear that Indian IT services, especially. So first of all, there's this demarcation today with in Indian IT space, where probably the vast majority of the companies are in IT services, but we do have a few companies which are slightly more on the, say, the ER&D or the product side to a certain extent. So those will have much lesser impact compared to the IT services. But it is true that IT services is undergoing a pretty bad phase. And what typically happens when clients stop spending, right? When there is uncertainty economically, what happens is large IT spenders, they sort of go into a freeze mode. Right. So then obviously, other than the keeping the lights on kind of projects, maintenance and operations management kind of projects, the other the new projects that are sort of the new implementation projects take a backseat. So that is what is happening right now. And I think the other aspect is the CIOs and the CTOs in companies are now trying to evaluate this new wave of AI to see how that will fit into their overall IT architecture, and how it will how they need to plan their investments accordingly. So my expectation is probably we are going to see another couple of quarters of weakness. after which I think then, we are sort of in the bottoming out process from a business perspective in IT. It might be another couple of quarters before sort of the dust settles and things sort of get back to normal in terms of growth and in terms of margins.
Okay, but any stocks that are on your radar, and between large cap IT and mid cap IT, what would you prefer? Let's say if the correction happens, would you be a
See,
buyer?
yeah, so I mean, like I said, the next 2 quarters looks to be slightly tough, but the market again will sort of take that in its stride, in my opinion. So in the next, say, 1 to 2 quarters, if you get an opportunity to buy high quality names like a TCS or an Infosys in the large cap space, maybe an LTTS or a KPIT or a Persistent. All of these kinds of good quality decent businesses, LTI, Mindtree, you could be a buyer on dips. Disclaimer, we are interested in assume that we are interested in all of these stocks.
Okay, absolutely got that. What about you, Mr. Goel? Any stocks on your radar from the IT space?
Well, definitely, today we have seen some cut in the IT stock, but not from the trading perspective, but maybe some investment perspective. We can see that two stocks that I am positive on. The first one is the TCS, because TCS was outperforming, but definitely today there is a cut. So I believe that 3850 and the 3800 is the good support for the TCS. So I believe there is a good opportunity in the TCS around this level for the investment perspective for the medium term, and I believe we can see the bounce up to the 4,000 level once again. So this could be the good opportunity in this scenario.
Okay, absolutely. And now let's shift focus to the market opening action. Of course, that 22,000 level is now gone on Nifty, and we are right now trading at 21,971. That's the level on Nifty 968, 48 points down, but Nifty Bank is in the green, trading flat on a flattish note, 46,715. That's the level there on Nifty Bank. But if you look at some of the gainers from today's trading session, we have UPL, we have Eicher Motors, SBI Live. These are some of the top gainers for you. We have Sun Pharma, Adani Enterprises, Titan. These are some of the gainers list for you on your screens. But of course, on the flip side, if you look at the top losers, Infosys, that is the top loser for you. 3% downtick there as we speak. And of course, HCL Tech, Wipro. Of course, we were expecting this cut on all the Indian IT companies on the back of that Accenture's cut, the revenue guidance cut that we have seen. TCS, Tech Mahindra, these are all trading in the green, in the red as we speak, 2.7% downtick there. And we have some of the PSU stocks as well that are in the red. And coming to you, Mr. Basum Malik, for PSU names as well, because we saw this rebound that happened yesterday in yesterday's trading session, when specifically I'm talking about all the PSU names. We had NTPC, we had BPCL, Power Grid, Coal India. These were among the top gainers in yesterday's trading session. But I want to know it from you now, that will this momentum gonna sustain going forward, because we have seen a bit of correction coming in as far as the mid cap and small cap stocks are concerned. But yesterday we saw a good rebound that happened. 3% uptick on mid cap, and small cap index was also up around 2%. So is this momentum gonna sustain according to you?
So first of all, I think we should not basket PSUs together. I mean, what is the common theme for PSUs? It's the promoter, which is the government of India. But PSUs span across all industries. And if you see that, all PSUs don't move together. There's no correlation in movement between, say, a PSU in infrastructure versus a PSU in steel versus a PSU in some other sector. So even within PSUs, even though there is common parentage, we need to be looking at individual sectors and individual companies. So, with that in mind and with that as a background, we should be, I am personally very positive on, the core sector where the government capex is happening. So, namely, look at where the government is spending money. Government is spending money on railways. It's spending money on building up infrastructure in terms of airports, in terms of highways, in terms of power plants, renewables. So these and in defense. So if you take a pick amongst the good and better managed PSUs in any one of these sectors, or more than one of these sectors, it's possible that uh, the outperformance can continue for a longer period.
Okay, what about you, Mr. Goyal? Any PSU stock that is on your radar, or any stocks from this basket that one should consider, especially after the correction that we have seen so far?
Definitely, there is some good consolidation was going on in the PSUs now. After this consolidation, maybe we can see once again the bounce back in these PSUs. But I believe that the railway stock will once again we can see the outperformance in the railway stocks. So like RVNL, IRFC, and all these stocks can once again the outperform in the PSUs basket. So RVNL, I am looking the RVNL. It is good. Right now it is going good consolidation at this level. The risk reward ratio is the favor. So like for the investment perspective, medium term 220 will be the good stop loss for this stock, and I can see the upside level up to the 280 to 300 levels.
Okay, railways and defense, by the way, they have had a stellar run. And if you see the market action right now, Masstock is one of the top gainers from the mid-cap space. Mr. Basum Malik, what are your thoughts on defense and railways? Do you think that one should consider these stocks at these levels?
I would think so. I mean, both of these are long-term structural changes that's happening in India. There's huge amount of focus if we look at the tenders that are being given out in the railways. So railways seems like a long-term play, at least for the next 2 to 3 years at least. Defense, especially in terms of building up uh, naval capabilities, building up missile capabilities. That's something which India is aggressively doing. Plus, there are a lot of small pockets where newer technologies coming up in defense. A lot of new players in the Indian defense manufacturing space. So both these spaces look very interesting.
Okay, by the way, some of the pharma stocks are in action today. Sun Pharma, Cipla. Let's pull up these stocks. So these stocks are actually the top gainers from the Nifty pack. Coming to you, Mr. Basum Malik first, and then I'll go to Mr. Goyal as well for pharma pack because we are seeing some of these stocks coming back in action. So any top picks that you have from the pharma pack?
So again, I mean, with disclosure that we are interested in all the stocks or the sectors that we talk about. In pharma, I think we are seeing a pretty strong demand both globally, and we are seeing demand picking up in India as well. So with that in mind, I think if you look at some of the top line or the frontline names like Sun Pharma, like Dr. Reddy's, Cipla in the large cap space, IPCA Labs or a JB Chemical or an Alchem in the slightly mid cap kind of areas, those look very interesting to me.
Okay, what about you, Mr. Goyal? Any pharma names on your radar?
Well, definitely, all pharma stocks are doing very well. Some stocks are outperformed, like the Sun Pharma and the Cipla. But on the technical front, like Cipla is a little bit stretch on the chart and a little bit trading on the far trading from the the key averages and everything. So I believe that IPCA level is going in good consolidation and it's not so much stretch. And so I believe the risk reward ratio in favor in the risk in the IPCA level. So 1124, 1130, it could be the good support level, and the upside target could be the 1250 level. So IPCA level is the good bet at this level.
Okay, absolutely got that. And let's talk about this. Some of the brokerage firms as well. Angel One, that is one of the top gainers for you from the small cap space, and the space actually has been doing pretty well on the back of, let's say, the stellar demat account numbers that we have seen. Mr. Basum Malik, any stocks for from this sector that is on your radar that investors can consider?
I personally think that again, this is a very long-term structural play that we are seeing in the Indian, wealth management, asset management business. Uh,
Okay.
Rather than these brokerage kind of stocks, I would be more keen on the AMC space because that's where probably from a business perspective the entry barriers are higher from a business perspective, and from an individual investor's perspective, mutual funds are where mostly people start their investment journey with. So the more new investors who come into the market, a large number of people will probably come in through the mutual fund route, through SIPs, and that space looks to be in a pretty, long-term uptrend from a business perspective. Again, not from a price action perspective, but from a business perspective, it looks to be in a very strong wicket for the next uh, fairly long time, maybe even the next decade it could keep doing well. So that is one space that I think we should be looking out for.
Okay, and talking about the mid cap and small cap space, gentlemen, because we have seen a rebound happening in yesterday's trading session. However, mid cap and small cap stocks, they have seen a good amount of correction, I would say, especially after the froth announcement, froth, mentioning of that froth or bubble by SEBI chief. So, what are your thoughts on mid cap and small cap space? Do you think the damage is now behind us, or any stocks that you would like to recommend from the mid cap and small cap space at these levels?
Yeah, was it for
Firstly,
me?
I would like to come to you, Mr. Basumali, for that.
Yeah, so see, first of all, I'm not very keen on differentiating the businesses based on market cap. Think of it from the business owner's perspective or the management's perspective. They don't get up in the morning and go to work thinking that my company is a small cap or my company is a large cap and let me do things differently. So market cap is more a market phenomenon than a business phenomenon. So, with that in mind, I think, it doesn't really matter whether a well-run business is a small cap or a mid cap or a large cap. Uh, if you find good businesses, that can sustain its earnings growth for the foreseeable future, then it doesn't matter what market cap it is. So that is my personal investment philosophy. So that's the quick answer to your question. Now, to look at the correction, uh, other than the SEBI chief, mentioning that it's froth, even the RBI bulletin that has come out this month, RBI has also mentioned that there seems to be some amount of exuberance in the mid and small cap space. So what that tells me is that there is, again, a lot of concern from the regulators that there is a lot of things happening, a lot of froth building up. And when a regulator or regulators come up and say these things publicly, what typically happens is it dampens the spirits, or it dampens the exuberance, and that is what we've seen. So, uh, market being reflexive in nature, what has happened is, just because the regulators have come out and said these things, markets have come into a corrective mode, which has taken out the froth to an extent from these stocks. So, in my opinion, again, if you have good businesses or if you know good businesses, it doesn't really matter what market cap it is. You can go ahead and take your bet.
Okay, and what about Mr. Goel? Any stocks on your radar from the mid cap and small cap space?
Well, definitely after this consolidation, definitely the once again the good quality mid-cap stock will will outperform the market, and there is still some stocks like which is outperforming the like e-Mudra, high-tech gear. So both are stocks I'm liking, and I believe that both this e-Mudra and high-tech gear, still there is opportunity to for the buy. So like first bit of the e-Mudra. So e-Mudra around the today still after the yesterday move, today again it's more. Up around 6%. So I believe that if we get the some around the 700 level, it will be the good buy the e Mudra with the stop loss 650 for the target 850 to 900 level. The high tech gear is also good bet. If we get the around the 600 level, it could be the good buy with the stop loss 560 for the target 725.
Okay, absolutely got that. E-Mudra stock, by the way, that is up around 216% in the last 1 year. So that's a multi-bagger stock for you. Let's see how the action pans out. The stock is on a roll today as well, 6% up as we speak, 735. That's the level. On e-Mudra and high-tech gear also 628, that's the level there, 6% uptick there as well. And on that note, thank you so much Mr. Goel for sharing all the picks with us and being with us here on BTTV. We'll discuss a lot more with Mr. Basum Malik, but now it's time for us to take a short and quick break. We'll be right back with lots more. Stay tuned.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
Welcome back ladies and gentlemen, and now if you look at the Nifty level at this point in time, 21,890. So 21,900, that's the level that is gone as well. As far as Nifty is concerned, 125 points down tick there on Nifty 50, and Nifty Bank also 102 points gone there as well. And of course IT back, that's the pain point today. HCL Tech down around 5% as we speak, Wipro, LTI Mindtree, Tech Mahindra all down 3 to 4% as we speak. And of course this is on the back of the negative news that has come in from Accenture, the revenue guidance cut that we have seen coming in from that particular company and the impact on Indian IT companies as we speak. Mr. Basum Malik, we'll talk more about IT space, but first let me come to you for some buzzing stocks as well. Real estate pack, I would like to talk to you about that because we have seen some selective stocks doing pretty well, and in today's trading session also, if you see, if we could pull up Prestige Estates, we could pull up Lodha. These are some of the gainers for you from today's trading session. And from the real estate pack, any stocks that are on your radar from this space, and will the momentum gonna continue going forward as well?
I would definitely think so. Real estate is, one of my top sectors that I prefer right now. So within that, again, you have to differentiate between. So real estate is a very geography-specific, business. There are only a few players who are pan-India, like Brokerage Properties or DLF, who have a presence across the country. But mostly, companies are specific to a geography, so that you have Mumbai players, you've sort of Bangalore players, you've Hyderabad players, you've NCR based players, and nowadays what we are seeing is a few of them are, so for example Prestige, if I remember correctly, they have successfully they are moving across from Bangalore to other locations, Pune, some in NCR, some in Mumbai, and other players are also trying to do that. So we, as a country, I think we are moving out of a real estate slump that we've been through for the last probably a decade. And typically real estate cycle lasts for 2 to 3 years, sometimes more. So, and we've just got in maybe 1 year of where real estate has done well. Prices have gone up, what that does is the two things which typically happen when real estate prices go up. So you have a lot of investors or buyers who are sitting outside who start getting this FOMO kind of thing that if I don't buy now, the prices are going to go up further, so I'll miss out on the opportunity. So that crowd is now sort of getting into buying real estate. Plus, with COVID, a requirement for slightly bigger homes, etc., was there. Uh, Return to office is now again a very big theme. So a lot more of commercial real estate is beginning to pick up. REITs as an investment vehicle have started picking up. So that is, in effect, going to fund a lot more of real estate development over the next, say, few years. And as we've seen, the SEBI, chief, also in one of our recent talks, she was talking about the real estate sector and the REITs and the InvITs and these kinds of things. And I think overall real estate is a very important sector, both from a overall economic perspective, because it has a lot of trickle down effect on other industries, steel, cement, furniture, wood, all of that, paints, etc. And of course labor. So it has a trickle down effect on the overall economy. And I think, like I said, I mean, it's been in a slump for a very long period, and now inventory is sort of at the lowest level across the country. So things will, definitely look up for the next 2 to 3 years, is what I believe.
Okay, absolutely got that. So that's the word coming in on the real estate pack. But let's talk about these oil and marketing companies as well, Mr. Basum Malik, because they are also in focus. They have risen up to 5% in the last two sessions, and this is following a 11% fall after the government slashed prices of petrol and diesel by 2 rupees per litre. So if we talk about these companies, and now Japanese brokerage firm Nomura is also looking bullish on these oil and marketing names. So on HPCL, it has upgraded the stock to buy and raised the target price also to 570. IOCL as well. IOCL also got an upgrade, and the target price for this is 195 rupees, and they have maintained a buy on BPCL as well with the target price of 735 odd rupees. So what are your thoughts on oil marketing companies? Any stocks that one should consider, especially the correction that we have seen?
So, I might sound a little bit contrarian, but I do not like any of these companies. And my reasoning is that, I don't want to get into a business which, whose fortunes can be turned on a dime by either a government intervention in prices, or some crude event happening somewhere else in the world. So somebody starts a fight with someone else in the Middle East, or Russia, Ukraine. There's some additional problems happening, or something somewhere goes wrong. It starts impacting oil, crude prices. So you as a minority investor are, I'm always going to be at the receiving end of things which can go wrong. So as a trader, yes, people might have a view on the short-term price movement, but I would be very, very skeptical of taking these kinds of companies and bet for any extended period of time.
Absolutely fair point, Mr. Basum Malik, as far as these oil and marketing companies are concerned. But of course, the pharma pack continues to outperform. And how? Ipca Lab, if you see, that's up around 2.5%. Sun Pharma, Biocon, Cipla, these stocks are doing pretty well in an otherwise weak market as we speak. In fact, Natco Pharma as well, up in the green. As we speak. But coming to you, Mr. Basum Malik, any two funda picks that you would like to share with our viewers for the next 1 year? Any companies that you are bullish on?
See, usually I don't like to speak about individual companies for the very simple reason that one, it affects my judgment that tomorrow if I have it in my portfolio, I'll find it very difficult to sell it, right? Because I've publicly said it on media. So that's one reason. Second is that, I might change my view tomorrow if something changes, and I may not come back and in time to say that I have a contrary opinion now. So that's the reason I avoid speaking of individual names. But I'll definitely talk about some of the sectors or industries that I like.
Okay.
I think we've already spoken about a few. I think real estate looks very interesting from a medium to long term perspective. You look at pharma, again, especially domestic pharma, companies which are focused on servicing India, where their India portfolio is relatively large. Those spaces are very interesting. You look at, even now, I think railways has a long way to go. Although most of those railway stocks have been consolidating, which is good. I mean, they've had a phenomenal run. They're now consolidating, probably making way for the next leg of up move. So railways is another very good space. Another very, very interesting space for me over the next maybe 5 years is the Indian manufacturing industry, right? Because a lot of manufacturing is slowly but surely moving away from China. So that's going to be a very long-term, play for India. So if you look at these kinds of areas and you pick you pick the good players within this space, I think investors will be better off than, sort of what the market does.
Okay. And the pain that we are seeing in the IT space today, Mr. Basum Malik, do you think this pain will be there for the, let's say, next few quarters? Because if you look at the cuts that we are seeing today, HCL Tech, that is down 5% as we speak. LTI Mindtree, that's one of the top losers for you. And of course, we have Wipro, Infi, Tech Mahindra, all down 3% as we speak. Do you think that this Accenture's revenue cut that we have seen, this is gonna impact the IT space going forward as well?
I think so. I mean, basically the business environment has weakened to an extent, right? So,
Okay.
so it's going to be difficult for any of these large IT services companies to suddenly come out and give out great returns. So basically, there is going to be pain. Now, when is it going to be the right time to get in these kinds of businesses? That is a question that we need to sort of ask ourselves, because these are good businesses. These are businesses which will be, in demand. It's not that IT is going to die tomorrow, right? It's not going to die in the next 10 years, 20 years. In fact, it's going to grow. We will need more and more software and services. So definitely the market is going to grow, that's for sure. Now the question is slightly about timing. So if someone has a greater than 1 year horizon, the next 2 quarters is actually a good time to start sort of nibbling into these stocks. If you have a very short term horizon, if you have a 3-month horizon, maybe then IT is probably not the pond where you want to fish in. But if you have a 1 year, 2 year, 3 year horizon, then it could be actually a good time to start buying in small tranches.
Absolutely, you said it, Mr. Basum Malik, and that's why I think everyone says कि सही वक्त और सही prices, एक साथ नहीं आते. But I want to know it from you. When is the right time now? I mean, do you think now the time is not right as far as the IT space is concerned, and when is the right time gonna come according to you?
I think you can afford to wait for at least a month or a quarter, and then start looking at them once more.
Okay, absolutely. Wait for a month at least. That's the word coming in. And as far as some other stocks are concerned, if we look at some of the top gainers for you from the mid-cap space, let's pull up that space for you. That space is now down 8 points on a flattish note, of course. We have Prestige, Tata Chemicals, Lodha, then we have HDFC, AMCs. Union Bank is also one of the top gainers for you. Mr. Basum Malik, what are your thoughts on Union Bank? 149, that's the level where we are at. 2% uptick there on this particular counter.
I am not very well versed with Union Bank as a business. I've not really tracked it very closely, but overall I think it's one of the better managed of the smaller PSU banks. But beyond that, I honestly don't have a view.
Any other PSU name that is on your radar from?
PSU Bank best, Evergreen SBI.
Okay. Any other mid-cap name?
Not really. I mean, I'm actually more positive on the life insurance side rather than just the PSU banking space.
Okay, and what about Bank of Baroda? Because we have been talking about this stock as well. 256, that's the level in the green as we speak. Do you cover Bank of Baroda?
See, basically, if you look at the PSU bank as a set of, as a basket, you have SBI, which is, sort of head and shoulders above everybody else.
Of course, yes.
And then you have Bank of Baroda, very closely followed by maybe PNB, Union Bank, Canara Bank. So these are all, I would put them in the same bracket in terms of quality of business, quality of management, how they run their businesses. So there's not too much, honestly, to split hairs between these.
And what about private banks, Mr. Basum Malik? I mean, stocks with the likes of HDFC Bank, ICICI Bank, Axis Bank.
I've always, been a sort of forever bull on Indian private banking space.
Okay.
Same continues. I don't think there's, in fact, now probably, if I look at an HDFC Bank or an ICICI or an Axis, they probably now have a very decent risk reward over the next, say, 5-year period. But yeah, I mean, will you get huge returns from there? No, I mean, but these banks will be compounders, steady performers in your portfolio.
Okay, absolutely got that. And if you look at some of the pain areas from the mid-cap space, of course, we have a lot of IT names today, KPIT Tech, Emphasis, Coforge, but we also have stocks like Paytm, Policy Bazaar. These are also some of the losers for you from this space. What are your thoughts on Paytm, Mr. Basum Malik? That's actually the talk of the town, and the stock has been in focus lately.
Absolutely no views on Paytm. I've been, since its IPO days, I've wondered, how will it make money? And I still have that question in my mind. I mean, how will it sort of grow? How will it make money? I still don't have an answer to it.
And what about, please go ahead.
No, so Policy Bazaar definitely has a, interesting business. What needs to be seen from that perspective is how the Bima Sugam initiative sort of impacts this. Does it impact it at all, or does it sort of grow the market? That's something that we need to track. But that's an interesting niche business area to be in.
And what about Zomato, Nykaa?
Nykaa, again, I don't find it very interesting because I think today, cosmetics and these kinds of businesses, online retail, too competitive, too many players. I'm sure you are a consumer of some of these. So, when I look around at the people I know, my wife and other folks, they buy across brands, right? It's not that they are only buying on Nykaa, they're buying across the brands. So too much competition. Zomato, on the other hand, again, very interesting business. And today, if you want to order out, you pretty much have only two options, right? Yes. You have Zomato and you have Swiggy. And again, that is somewhere it's sort of now ingrained, the habit creation has happened, right? 5 years back, it was not as prevalent as today. So even if they start asking you for slightly more, fees, delivery fees, etc., you are willing to pay because now you are accustomed to it. So out of all these so-called quote-unquote new age businesses, I would say Zomato is the best positioned from a long-term perspective.
Okay, absolutely. Zomato is best positioned. That's the word coming in. And on that wonderful note, thank you so much, Mr. Basum Malik, for taking the time out and sharing your valuable insights with us here on BTTV.
Thank you so much.
So back to markets, ladies and gentlemen, and 21,931, 949. That's the level on Nifty. Of course, we have reclaimed that 21,900 mark, but Nifty Bank is in the green as we speak, 46,776. So we have recovered as far as Nifty Bank is concerned. But of course, we are getting support from selective names like BPCL, Cipla, Sun Pharma. Of course, Pharma Pack, that's going to be, I think, the star performer today. And of course, the pain continues in the IT space. HCL Tech, Wipro, LTI Mindtree. These are some of the top losers for you on the flip side, on the back of the Accenture's cut, the revenue guidance cut that we have seen coming in yesterday. So on that note, ladies and gentlemen, it's now time for me and my team to wrap up this edition of Market Today. But lots more coming up for you only on BTTV. So stay tuned and many thanks for watching.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
The FOMC decided to leave our policy interest rate unchanged